What is going on, investors? Hopefully you guys are having a great day out there. Time to talk about Facebook Incorporated, ticker symbol FB. Over the last year, stocks up 61%, year to date up 11%. That probably doesn't include the after hour pop we're seeing in this stock, heading to all-time highs over $320 per share, up 4%. After recording a quarter that absolutely blew things out of the water. I think when we saw Google report just a phenomenal quarter yesterday, it was almost a foregone conclusion that Facebook was going to have a fantastic quarter as well. We even saw Pinterest as well. The stock didn't react very well, but their report actually was quite nice. So we're seeing Facebook. I'll draw a line where the shares are so you can see it here. We have gapped up again. This thing has been on a monster move. At the start of March, this thing was $254 per share. Now we're sitting at about $322 per share on Facebook. We'll talk about the price action. Talk about this formation when you have these big moves up in a stock. Can you potentially buy this one going forward? We'll talk about that, but let's jump into these numbers. These numbers are really nice. Take a look at them from a high level, then we'll take a look at them a little bit closer level. We'll look at cash flows. We'll look at the balance sheet as well. As you can probably assume, this company is pretty crystal clean on all of those fronts. So here's our financial highlights here. Revenue grew on that top line, at least that advertising revenue came in at 46%. They've got some other revenue here. My guess is that might be like Oculus and maybe some other stuff that they've got going on that came in actually pretty nice, $732 million. They're almost running at $1 billion run rate on something other than advertising. Again, their advertising business, $25 billion business, growing that 46%. When we saw Google report yesterday, similar type growth, I think you can expect the other market leader in online advertising was probably going to follow. So we got total revenue coming up 48% over the last year. This is on a quarterly basis, year over year. Total costs and expenses, they talked about this on the last call. It got some investors a little nervous. They're coming in on the high end of their cost, and I think they even upped that a little bit today, but they raised that about 25%. But look, when you're growing your top line by 48%, growing your cost and revenue by 25%, not that big of a deal. Income from operations, that only grew 93%. I say only, that's unbelievable. Company of this size. So all things being considered, everything looking good. Now, from a growth perspective, you probably can nitpick a little bit here, okay? Facebook daily active users, 8% year-over-year growth. Facebook monthly active users coming in at 10% year-over-year. And again, we talked about how they're actually expect their 21 total expenses to be in the $70 to $73 billion range. They had guided from 68 to 73, so they kind of bumping that up to the high end of the range. But all things being considered, when you're growing that top line as fast as Facebook is, be honest with you, no one's going to care. So here's the consolidated statement of income, basically revenue and profit for the 3 months. Here's 2020 over here, 2021 over here. We've got revenue. Again, we grew this 46% from $17 billion up to $26.1 billion. Here's our cost of revenue, research and development, marketing and sales, and general administrative. Take a look at this cost of revenue. So they made $26 billion in the quarter. It cost them just $5.1 billion. It's because you got a bunch of people on Facebook posting for free. So you basically got free labor from everybody posting on Facebook. And a lot of their advertising is automated. If you've ever used Facebook advertising, it's almost all automated. Maybe if you got a big, gigantic account, you're spending thousands of dollars a day. You might have an account rep. You might have some other tools that are allowed to you. But it is an incredibly powerful platform because they get all the content basically for free. And advertisers can kind of self-serve themselves on the platform. It is wonderful. Now, they still have to invest in R&D, new products, new stuff on the website, on the app, things like that. You got marketing and sales, so they still have to spend money, maybe attracting advertisers and things like that. I've seen ads for Facebook on TV, those types of things. And then you've got some general administrative. That's basically flat. Same with sales and marketing. Research and development did tick up quite a bit. I think you like to see that though, okay? Because Facebook, we talked about this on the Google video that we did, the Microsoft video. These companies are not going to be able to grow through acquisition, okay, to a certain degree. Are they going to be able to acquire companies? Sure. Are they going to acquire big companies? Probably not. The regulators here in the United States and in Europe just literally are not going to allow it to happen without spending a mucho bucks on lawyers and things like that and maybe lobbying. So the easiest way for these companies to grow is actually develop new products, grow within more organically. And so I actually like to see that they bolted on about $1.2 billion to this research and development, develop new stuff for the Oculus, new products, new features to Facebook, new features for advertisers. All those things I think are good. That gets our total costs and expenses up to $14.8 billion. So you take this 26 number, you minus 14, and you get this income from operations coming in at just $11.4 billion. Last year, we were at 5.9. I thought that was amazing. Now we basically doubled that to $11.4 billion. Now you got some income taxes that you got to say. It's a myth that these big, gigantic corporations don't pay income taxes here. $2 billion in a quarter. For you in Washington, D.C., that gets a net income of $9.5 billion. Last year, we're sitting at $4.9 billion. Earnings per share coming in at $3.30. Last year, we were at $1.71. What are they doing with some of this cash? Because they're just flowing tons of cash to the bottom line. Well, they're buying back shares just fractionally here over the last year, but I know they've got a relatively high amount of share buyback that they have authorized. Now, moving on to the balance sheet with Facebook, we've got the end of the year of 2020, basically, and now a couple months in at the end of March. So we see cash and cash equivalents growing a little bit, marketable securities almost dead flat. So you've seen a little bit of that cash that they generated on that net income side flowing to the top line, which you would expect here. Okay, so you've got about, we'll call that $65 billion worth of cash sitting on the balance sheet. Just absolutely phenomenal. You've got a little bit more in receivables. So you got another $10.2 billion in receivables. So you're sitting at about $75 billion or so in cash. So your total assets are coming here at 163, and over 70 of that is in cash. I mean, that's just... People wonder why I love these FANG stocks. People wonder why tech just keeps going up and up. When you come and look at this chart of Facebook, we could zoom this out. I mean, this chart just goes up and up and up. They wonder why these stocks just continue to go up and up. It's really easy. You just come here and look, number one, at the profit, the gross margins, the income from operations, the earnings per share, the fact that their costs are not going up rapidly. It's just a fantastic business. And then when you go over the balance sheet, it probably gets even better than that. They have all this cash and they have almost no liabilities. Total liabilities, $30 billion. Okay, some of it is like leases, things like that, and accrued expenses. But it's like nothing. Okay, I mean, they could literally wipe out their whole liabilities in one fair swoop and still have more cash than probably nearly 90% of the companies in existence. It is just absolutely amazing. So statements of cash flows coming here with Facebook. Got 3 months ended here, 20 over 21. We pulled down that fantastic $9.5 billion in net income. Last year, we're sitting at 4.9. Get to add back in the significant things we add back in is stock-based compensation, $1.8 billion and $1.9 billion on depreciation side. That gives us net cash provided by operating activities. Actually up fractionally, okay, up about, we'll call that about 10%. We went from 11 billion up to $12.2 billion. Looks like we've accelerated some share-based compensation, and this depreciation was a little bit higher, accounts receivable as well. So all things being considered, it was basically flat from a cash flows perspective. The net income definitely printed a better than expected number, in my opinion. Now, from the investing activities, about flat. Okay, we invested about 4.1 last year. We're sitting at about 4.8 this year. All things being considered, pretty much what you're looking for. Here's the repurchase of the common stock. Last year, we repurchased 1.2 billion. This year, just $4 billion. Yes, $4 billion worth of common stock. So you better believe that also helped this stock on this rally. And they have lots more. I think this is off the top of my head, so forgive me if this is wrong, but I think they've authorized a $50 billion buyback. So they have plenty of money left on this buyback, in my opinion. So should be very, very bullish in the shorter term, at least for the stock of Facebook. Now, moving over to the stock chart, because look, the numbers speak for themselves with Facebook. The stock chart is starting to speak for itself as well. I drew a line in here. We're sitting up here at 323 or so on the stock right now. So here's what I see. Once we broke above all-time highs, which was 304, the stock kind of danced for a second and was waiting for the report, and now we busted up above it. So I think you've got some support on the way back down. Let's just say the entire market kind of has a pullback at some point, which I think is probably overdue if you look at the broader markets. Let's just say that happens. You probably got some support with this one at 316. More specifically, probably here at 304. Again, that's a long ways. $20 where the stock is right now. Get a pullback to those levels. That's where I'd first want to step in on this one. Now, let's just assume you have 0 shares of Facebook. You're a new investor. You're trying to build up a portfolio. Look, I wouldn't really try to, pick highs and lows on this one. I would kind of jump in. I wouldn't jump in with both feet, but maybe put your toe in the water, okay? Because if I bring up the stock chart of Google, conveniently I have it up here. Look, Google's been like staircasing up like all year, okay? And Facebook, I could see potentially doing the same thing, okay? They could start staircasing this thing up. This thing could get up to 340, 350. Because look, from a price to earnings basis, this one's sitting at $27. This probably doesn't include the fantastic net income number that they just printed. This thing's probably pretty fairly valued, in my opinion. The last note I want to make on Facebook, pretty simple business model to understand. This stock has just been on a monster move. If you're like me, you've already been overweight this one. This is kind of like go to, pack up the car, go to the golf course, hit some golf balls type day. If you're not in Facebook, you're not in Google. In my opinion, these two need to be a cornerstone of your portfolio. Do you need to be mega overweight? Do you need to have the biggest allocation to these two? No. But I think you need some exposure to both these companies because this is online advertising, this is video, this is everything, okay? And especially before you go out and buy Snapchat, before you go out and buy Pinterest, before you go out and buy Twitter stock, okay? Make sure you have a full allocation of Google and Facebook, okay? These are the companies that are going to dominate this business. These are the Michael Jordans of the online advertising business. Don't go invest in Charles Barkley or Charles Oakley or Hakeem Olajuwon before you go and invest in Michael Jordan, okay? Google and Facebook are Michael Jordan. Make sure you invest in them before you go get Shaquille O'Neal or some of these other stocks that might not even be that good because Shaq was a great player. So hopefully that analogy made sense. Hopefully you guys enjoyed this video. We'll, of course, be back with more. Loving what I'm seeing with Facebook. If you're already long this stock, leave me a comment down below. Let's celebrate together because this last month and especially today has been absolutely fantastic with Facebook. And I would consider this just the beginning of more good days to come. So hopefully you guys enjoyed this video. We'll be back again soon. Good luck with your investments.